Hey traders, here's a recap of the trades I've taken this week. I'll pick up where I left off from my video last Friday. I ended up having to roll the Twitter position from last week. I was hoping that I could close it out because it was very close to my strike price, but I ended up having to roll it for a 15-cent credit. I got back into Micron Technologies. I sold the 60 strike put and collected 66 cents. I did a little more contracts than normal. I did 15 contracts just because I didn't have any other stocks that I was interested in trading, so I decided to put a little more into Micron, which is riskier because you don't want to tie up all your buying power in one stock, but I was okay taking that risk. I ended up making a big mistake with this trade. If you follow Micron, you'll know that it had a drop this week. And as I mentioned in other videos, you should always take off your trades if you've reached the majority of your profit, because it doesn't make sense to hold on to a trade for a few more days if you've already captured, say, 90-95% of your profit. It's just not worth the risk to make the final few, cents on whatever's left in your trade. So if we look really quick at a chart, on the left is a chart of Micron stock, and on the right is a chart of the option that I sold. And you'll see that on Wednesday, Micron was above 64, which is 4 points above my strike price. So I was in a great position on Wednesday. And you can see that option had dropped down to 5 cents. So initially, when I sold that on the previous Friday, I collected 66 cents. I could have bought this back on Wednesday for 5 cents. I think when I looked at it, it was trading around 7 or 8 cents. And I put an order in to buy it back for 5, but it never hit 5 again. And the reason why I did is because with TD Ameritrade, commissions are free if it's below 5 cents. So dummy me didn't want to pay the extra, whatever it was going to be, 10, 15 bucks to get out of this thing when I'd already made, a good bit of money. And sure enough, Micron started dropping. And you can see the next day it dropped below my strike, and that option shot up in price. It got as high as $2.95. So I could have got out of this thing on Wednesday, freed up my buying power to put into another trade, but now I'm stuck with Micron, and I had to roll it today because it's still trading, above or below my strike price. Micron closed at 58.74, so I ended up having to roll it. I was able to roll it at least down a strike and still collect a credit. But, this just goes to show you should, it was dumb on my part. I knew better. I should have closed this out when I had the chance, and I didn't take that chance. And then now I'm paying for it by having to roll it. And who knows, I may have to roll this for several weeks before Micron comes back above my strike price. Anyway, let's go back. So that was Micron. These Tesla trades are just positions I was closing out from the previous week. I was closing out the short strike because these were out of the money, but as I've mentioned before, I don't like to let my short strikes expire. I'd rather close them out so I don't have any risk of something happening after hours. I got back into SPLK. I had traded a strangle on them for earnings last week, and I decided to get back in with just a put, so I sold a put at the 110 strike and got $1.15 for that one. For Netflix, this was on Monday of this week. Netflix had run up some, so I decided to do a call credit spread by selling the 360 call and buying the 360-250. So I'm basically making a bet that Netflix will not go to 360 by the end of this week, and I got paid a nice credit of 57 cents for that. If we look at a chart, so you can see on the left, this is when I got into Netflix. After it had made that run up, I sold the call credit spread, and my strikes would have been up top here at 360. But then later in the day, Netflix started dropping, so I thought it could be a good opportunity to also add a put credit spread. So I actually added a put credit spread below the stock at the 345 strike was where the short strike was. So now basically I make profit as long as Netflix stays between 345 and 360. and this is an iron condor. So I didn't start off with an iron condor, but that's what it ends up being when you have a call credit spread and a put credit spread together. Normally you would put those trades on simultaneously if you were going to trade an iron condor, but that wasn't my intentions. It just happened to be that way because of the stock drop. I thought it was a good time to put on that put credit spread, which allowed me to get greater distance from the stock versus if I'd have put that on earlier, my put credit spread strike would have probably had to been higher up. If we go back to the trade, you can see this is where I put on the put credit spread, and I got paid another 68 cents. So the nice thing about it is I got 57 cents, which is $570 on the call, and then $680 on the put. And you can see that Netflix for the rest of the week traded very nicely within that range. So that's where I got into the put. And then if we look at the rest of the week, it stayed right between my strikes until today. Netflix started running up, which got me nervous because it was getting pretty close to my strike price. You can ignore these lines here. I'll talk about that trade later. But you can see toward the end of the day, it started running right up to my 360 strike. I mean, I was anticipating this was going to expire worthless. I mean, even when it was at 358, I thought there's no way this is going to run up to 360. But Netflix ended up going up 8 points today. And so right about 10 minutes before the market closed, I decided to close the position out, and I had to pay $100 to close it out. So I think I collected whatever that came out to be, about $1,100, and then I had to spend $100 to buy it back. So again, you never know what's going to happen on Fridays or even in the last few hours, so it's always good to take a trade off. I could have taken that trade off earlier in the day for a lot cheaper, probably $20 or $30, but again, I had no idea it was going to run up like it did. I thought it was going to expire worthless. But it still came out to be a good trade. So it was Netflix. I got into a BABA debit spread. I paid $1.11 for it. I got 5 contracts, and then I ended up closing it out not long after, later in the day. BABA had dropped, and I decided to just close it out and salvage what I had left. So I took about a 50-cent loss on that, because I just didn't anticipate BABA would recover later in the week, which it ended up recovering. If I would have held on to this trade, I would have doubled my money on it. But I was fine getting out, taking that loss, because I knew I had made those credits from the Netflix trade I took earlier. Also got into LOED. I got a 70-cent credit for doing a put credit spread on them. They had run up some because of some news that came out about Apple using them as their supplier for screens for the phone. But the stock started dropping later in the week and actually dropped below my strike prices to where I rolled it. I normally don't roll spreads, but I decided to roll this, and I rolled it down a strike, but also widened my spread so that I could still get a credit. If I hadn't have widened the spread, I would have still had to pay a debit. The downside of doing that is now I'm adding additional risk. My original spread was only 3 points of risk. Now it's 4 points. I'm okay doing that because I know if I have to keep rolling this, I may eventually turn it in just to a naked put. I may just close out the long and keep rolling the short leg if I have the buying power to do so. So we'll just see how this goes going forward. Let's see, what else did I have? Talked about OLED, BABA, the Netflix trade. So FDX, FedEx, this was a trade I had put on earlier last week. I had sold a put credit spread, and the stock had dropped. I was losing money for the majority of earlier in the week, but luckily it popped back up to where I was able to close it out for 55 cents and still make a small profit on it. I think I initially collected like 60-something cents for it, so I was able to get out for a small profit on FedEx. Here's where I finally was able to close out of my Twitter trade, the one that I have been rolling for I think about 11 weeks. I was finally able to close it out because it went back above my strike price. Because when I rolled it on Friday, I was actually able to roll it down a strike from 34 to 33.50 and still get a credit. So since it was above 33.50 today, I just closed it out for 5 cents. Sorry, I actually closed that out yesterday for 5 cents. Again, learning from my mistake from Micron, go ahead and closing it out and not risking holding it one more day and Twitter possibly falling. So I think over the 11-week period, I made something like $1,500 or somewhere like that on this Twitter trade after all the rolls that you add up all the rolls. That's where I rolled OLED. Facebook, this is that Facebook trade I mentioned in my last video that I have. It's a diagonal spread. So I bought a call, in the money call out to July, and then I'm selling weekly calls against it. So this is the credit I received when since Facebook went above my short strike of 185, I rolled it to the next week at the same strike and still collected $750 for that roll. This first solar trade is a roll that I did because First Solar's down and I've been rolling it for a while, but I was able to roll my strike down as well. Here's why I did the MU roll, since I didn't get out of it when I had the chance. When I rolled it, I was able to roll it down for a strike, but I had to pay a small debit for that. I had to pay a penny to roll it down. And then the last trade I'll talk about is some day trades I took today. I don't normally day trade a lot, but on some Fridays, if I have the time, I will do some day trades. So I day traded NVDA, BABA, Netflix, and Tesla today. And then I also got into a short put on Trip. I sold a put at the 53.50 strike for next week. But I'll go over quickly the day trades that I took. So this is the NVIDIA trade. You can see that NVIDIA was running up, and I got in this morning around this price level. If we go back and look, I paid 99 cents for that option, and I got 10 contracts. So if we go back to the chart. So NVIDIA was running sideways. I was expecting it to hopefully pop from here, but it started dropping. And so when it got down to this level, I was debating on whether or not if I should just get out and take a loss. But I looked at the open interest, and I noticed that there was a lot of open interest at the 255 strike. And stocks tend to pin near strikes that have higher open interest. So I thought there could be a good chance for NVIDIA to run back up to at least 255. So what I did is I decided to buy more. So I initially bought 10 contracts here at 99 cents, but then I bought 10 more contracts for the same strike price. That would have been here. No, sorry. Where did I buy the... Oh, it's here. So I initially bought the 99 cents, and then I bought 10 more at 49 cents. So that reduced my cost basis for the overall trade for the 20 contracts. And then NVIDIA did run up like I had anticipated, and so I sold half of my contracts here at this price level, and then I held on to the other 10 contracts and sold them at this price level here. So when it's all said and done, I got in at 99 cents and then at 49. Then I sold 10 of them at 94, and then I sold the remainder down here at $1.45. I also bought some puts on NVIDIA after it had ran up. Let's see, it was at 10.27. So that would have been right around at this point. So right after I got out of those first 10 contracts, I thought there was a chance that NVIDIA may drop back down. So I bought a cheap put on it. I bought like the 252.50 strike price, just thinking if it did run back down to this level that I could, make really good on it. It never happened, so I took a loss on that, but it was only $170 compared to I made, I think $500 or $600 on NVIDIA altogether. So it was worth it to me to take that little gamble if it did turn around and go back down. So that was NVIDIA trade. What else? BABA. BABA was a really good trade. I got in at, at this price, and it was trading sideways, sort of, and I was just waiting for it to make a pop up to get out, and it finally did make that jump up, and I got out right here. I wish I'd have stayed into it because it had a huge run up the rest of the day, and I missed out on about $4,000 or $5,000 if I would have just held on to this for this run up. Of course, I didn't know that was going to happen, but I still made out pretty good on it. I got in at 99 cents for BABA, and then I sold it here for $1.70. So I made about $700 on that BABA trade. We talked about NVDA, Netflix. Netflix, I got in right about here on this pullback. And then I think I'd also checked the open interest for it as well and saw the 355 had a good bit of open interest. So I was just waiting for it to run back up to 355. And once it did get up to that price level, I got out. And of course, it took off the rest of the day as well. But I still made a good profit on that. I got in for, okay, here's where I bought in. I paid 62 cents for it, and then I sold it for $1.11. Yeah, that other Netflix trade was where I was closing out that put credit spread that I had talked about earlier. I was buying back those 10 contracts, and then that's where I bought the call at the 355 strike at 62 cents, and then I sold it not long after for $1.11. And then lastly was Tesla. Tesla was a similar situation. When I took a look at it, I noticed that there was a good bit of open interest at 290, and so I got in, and it was trading sideways for a while, so I was expecting it to have a pop up, and it finally did, and I closed out here. And so I got in at 93 cents, and I was able to close it out for $1.64. So I got a really nice return on that one as well. And this is where I closed my Netflix out at the end of the day. That call spread I mentioned earlier, 10 minutes before the market closed, I just went ahead and bought it back for 10 cents. And then I added a new trade with TripAdvisor. I sold a put on it for 63 cents. So that's all the trades that I took today. If you guys have any questions about any of them, let me know.